interest rates today. Hi, everybody. My name is Lori Key. I am the Realty Goddess of Los Angeles, California, and I help to establish the community one house at a time. Ladies and gentlemen, rates are crazy right now in real estate, but there seems to be a lot of confusion about interest rates and what they are and how they're used and what happens when they're locked. First and foremost, I do want to tell you that I am not a lender. I'm giving you some general information about interest rates. And how they are used in the real estate world. A lot of people have a lot of misconceptions about them. So let's talk about them today. It's really interesting how they're used. Most people don't know that mortgage rates can change daily, and they can change more than once in a day, and it can be pretty volatile sometimes. This means that getting a rate information from a lender in the morning could mean that if you called back in the afternoon, the rate is different. And a common reaction might be that it's a bait and switch, but it's really not. It's the market. It's basically the market. It's how that works in the market. So mortgage companies all follow the same set of standards with the mortgage rates. And this is why interest rates from one mortgage lender to the next are very similar. One won't find a rate that another one can't find about the same time. And everyone else, you're never going to get one lender that's going to say, hey, it's 3.0 today, and then everyone else is 4.0. So instead, differences in mortgage rates are typically very small, and usually it's the difference in the cost in the form of discount points and origination fees. Now, I'm not going to get into that because that is a lender's expertise. I do have lenders that you can speak with, so please make sure to reach out to me if you would like to talk about that with them directly. I'm just giving you some general guidelines because I had an example where I had a class this last couple of weeks, and a gentleman was so fixated on interest rates, and he's in escrow and he's still fixated on interest rates. But we're actually going to talk about why he needs to kind of ease up on that a little bit. So most lenders won't allow for an interest rate lock unless the applicant has completed a loan application on file. And when you have a loan application on file, a completed loan app means that you have submitted all of the necessary paperwork, such as your pay stubs, your W-2, your tax forms, credit reports, many other items that lenders require to get you approved. And there's no universal guidelines that all lenders follow that set rules on when you can and cannot lock into a rate. So lenders actually set their own standards with that. Interest rate lock periods can vary. They can vary from as short as 10 days plus. And some can go 60, 90, or even more. But the longer the lock period, the more expensive the selected rate will be. So a 10-day lock means that the loan package is fully approved, and that's all that's needed to lock the rate. Important note, though, however, is if the newly locked rate is different than the initial rate, the lender will then be required to run the loan through another automated approval system at that time. A locked rate protects the consumer should interest rates go up because, like I said, they can fluctuate daily, they can fluctuate weekly, they can fluctuate a few hours apart. But it just means that it protects you as well. An interest rate lock is essentially a mortgage rate insurance policy. The borrower is protected. So you're protected once you're locked into the rate. On the other hand, if the rates go down, the consumer don't get to float down. The that they have is what they have for that time. Okay. So lenders take locks just as seriously as consumers do, because they want to make sure that they're getting you the best rate. So it's not something that they're just like, let's lock them in right here when we know that something may be coming later. You know, they typically can kind of get a feel, but there are no crystal balls when it comes to interest rates. There are lenders that do allow for a float down lock, but again, it's up to the lender to establish its own rate lock policies. A common requirement is a minimum amount of the rate change. So what that means is, for instance, if rates have gone down by 0.25%, a lender might allow a one-time adjustment to a locked rate. In such an instance, applicants can get a lower rate, but not the lowest that the lender offers. So let's make sure that that's very clear as well. If rates have fallen and the chosen lender does not honor the lower rate for the locked loan, the consumer can think, and this is where the gentleman was wrong in the class. He thinks that just canceling the loan and going with another lender can be the solution, but it's not the solution. This means the entire loan file will need to be changed, and the appraisal will need to be updated. So an example of that is starting all over. And this means that it may not even be worth it, and you may even lose the home that you may be in escrow with. Now, this gentleman who contacted me is almost closed, and he wants his rate to be 0.3 lower than what it is. Well, if he does that and he's using a down payment assistance program, he's going to lose everything. But in his mind, he thinks he's trying to save additional money. It just doesn't work just because you want it to. There are things in place that are there to protect you. So if he drops out of this because he wants a lower rate, not only is he risking the fact that he may not get that lower rate, he's risking that he's going to lose the down payment assistance money, as well as possibly the house, because the person who he's buying it from may not want to wait around for him to start all over again. The appraisal is very important as well, and you would have to pay an additional fee if you had to do an updated appraisal. Other credit documents will need to be reordered if you do that. And until someone resubmits a loan application to the second lender, there's an initial critical time period where the loan file is not in the position to be locked with the new lender, and switching midstream can be a very, very detrimental thing. Now, listen, as I stated earlier, I am not a loan officer. I am a real estate agent. I am a realtor. But your loan officer can explain lock policies and even send you a disclosure form, which spells out everything that you need to know about locking in and when you can't and under what circumstances. Lenders have different requirements, so make sure that you're very, very clear on the outset about the timing of your rate lock. Because rates are so good right now, this is why I decided that I wanted to come on and talk about them, because they are at a historic low. If you're thinking about buying, if you're thinking about, moving up, moving down, you need to understand what's going on right now. You can save a lot of money during this period of low interest rates. So don't dilly-dally. Don't think that the market is going to crash and it's going to change. Get in while you can. This is an excellent opportunity for you to buy, and it's an excellent opportunity for you to be locked in at a really good rate. So contact your lender today, and if you don't have one, please reach out to me, and I'll be happy to assist you in this endeavor. My name is Laura Key. I am the Realty Goddess, and I help to establish the community one house at a time. I wish you nothing but love, light, and blessings. Why not go out on a limb? Isn't that where the fruit is? Guys, I have not seen any comments today. I think there's something going on with the system. So if you did make any comments, I will go back and follow them, and then I will get back to you with any questions that you have. Mwah! Sugar. Bye.